Yeah, CAPR is a very good short. Some easy money. Make sure you use EM and Godel. So these are the FactSet consensus estimates. We're just about to get the 2027 to 2030 estimates, so that's going to be exciting. But this is the consensus that Wall Street uses. So you can get your calculations for enterprise value. Let's see here. I'm going to take enterprise value, divide by shares outstanding. That's going to give us an enterprise value stock price, basically. And then we're going to divide by EPS. And that is 18 times enterprise value to earnings. Okay. And then we're going to lock J and L in my spreadsheet. Copy and paste this across the board, which is cool. I don't know what's up with this one-time charge maybe, but I'd like to get the EPS that is non-GAAP. All right, so Pfizer. We're gonna do the same thing for Pfizer, and Pfizer's EPS. Again, a little jumpy just because one-time gains, all kind of things like that. But let's see. I'll put it in the gap, I guess. Why not? Pfizer 10 times earnings. Remarkable. That's EV to earnings. So we're taking the full enterprise value. And one of the things we can do is do trim mean. So we could trim the top, sort of 15%. So maybe make more sense, or maybe, well, we can trim less over time, but you can see the idea of trim mean where it should exclude. All right, well, let's add a few more and then you'll see how trim mean works. This is how you do professional research. Not that most of you guys even want to do it, right? Let's do Vertex. Yeah, we really have to get the gap, non-gap straightened out. I don't like this at all. I'm gonna fix that immediately. Lily will change the estimates quite substantially. So let's see how that goes. 690, 580, 2180, 2966. Look at that earnings growth from $7 to $30. The drug doesn't make sense. It's not. I wouldn't even call it a drug. That's insulting. Okay, so drug stocks are trading 18 times this year, 15 times next year. Is that cheap enough for somebody? You like that? What you don't want to do when you do this is do ADRs twice, because if you do ADRs twice, you end up double counting when you don't need to double count. I don't know how that relates to investment, but no, I don't look at the macro if that's what you're asking. I try to focus on the things I can control and that I understand. Global investment, changes. It's not really my INMB. So is this right? GSK 6 times? Oh, this is in GBP. That's why. What's the stock price, man? Sorry, it's earnings season. I can't look at lots of stocks during earnings season. Manufacturer and distributor of chemical products. Okay. First, we'll check EM. That's what I always do. Pretty cyclical company. Earnings go up and down like a yo-yo. These are straight from FactSet. These are Glengarry leads. Revenue was $6 billion, then 9, then 9, then 7, then 6, then 9, then 7, then 7, then going to be 7 again next year. It's kind of jumping all over the place. 4 times cash flow? Whoa, now I'm interested. 115 million shares outstanding. So this is kind of a small mid-cap. Well, I'd say mid-cap, $2.5 billion market value. From 1892, Virginia Corporation. Wow, that's a rare one. Principal office in Clayton, Missouri. Clayton Bigsby would love this one. Usually Clayton, Missouri. Leading U.S. manufacturer of ammunition? Okay, well, that's not chemicals. Chlor-alkali products. Okay, that I understand. Vinyls. That I understand. I know all about those. I know all about, chlorine or alkali chlorides. Epoxy. Okay. But what's Winchester? Isn't that a gun? Chlorine and caustic soda, ethylene dichloride, vinyl chloride monomers, methyl chloride, methylene chloride, chloroform, carbon tetrachloride, perchloroethylene, hydrochloric acid, hydrogen, bleach, Potassium hydroxide, okay, that's 55% of revenue. Epoxy sells epoxies and precursors, including aromatics like acetone and phenol, allyl chloride, epichlorohydrin, liquid epoxy resins, solid epoxy resins, and formulated solutions such as converted epoxy resins and additives. That's 20%. And then we got Winchester. Winchester is 25% of revenue. Sporting ammunition, reloading components, small caliber military ammunition, produced commercially by the electrolysis of salts. 1 ton of chlorine to 1.1 tons of caustic soda, and 30, millitons of hydrogen. This is one electrochemical unit. I don't know about Palantir, man. If I knew that they were having a good quarter or not, I'd have material non-public insider information. It's something I don't want. My guess is they probably had a pretty good quarter. But yeah, maybe they could sell the gun part of this and just be a chemicals company. Very low margin business. Looks like peak cycle earnings were as high as 2 billion. Trough cycle earnings around 300 million. They're levered, looks like. You can just tell from the income statement. Not usually how you tell, but they got some debt. Okay, so they're losing money on epoxy in trough. Winchester is actually quite stable, normal business. Chlor-alkali's, profitable even at trough. You have an AI that can input this information for me? Listen, dude, I will pay you $1 million cash if you can give me an AI that will take arbitrary financial information and organize it perfectly into the way I want it. $1 million cash, since you know how to do it. There's this one thing though. If I'm right, well, you're gonna have to do something for me. Let's just put it that way. You're not gonna like it. Hey, yo. It's this little trick I learned in prison. EV is 5.3 billion. No, he doesn't know how to do it. Nobody knows how to do that. If anybody knows how to do that, that's me. I am the GOAT of financial statements, financial programming, and AI. Stop it. I'm the man. They just don't know how to do it, man. They could do everything else. So data entry is not the skill of AI. I've tried everything. Well, they've seen AI do something useful for them in a different capacity, and they figure it's got to be, a way to do it. It's a reasonable, assumption, but it is wrong. I got a lot of code that I can show you. It wasn't really optimized to do data entry. Data entry is tough for AI. Well, you want to make it into, let's say you wanted to turn it into a CSV, which is very reasonable. AI takes a lot of liberties, so if you don't explain exactly what you want, like column order or something like that, what you end up doing is, one approach I've done is between chunking. Oh yeah, no, I mean, I have a 50-step process to try to get it to do it. It still doesn't work. You have a chunker, a sanitizer, a reorderer. I mean, you could break it down into tons of steps. It still will miss it. It'll still miss something. It's brutal. I mean, I'm going to try to get it to work, but I've tried it from GCP too. It's honestly just stupid. It's so smart at lots of things, but it doesn't have the IQ of a third grader and some other things. Why invest in great companies when you can have Fartcoin? All right, so peak cycle free cash flow, 1.7 billion. Trough cycle free cash flow, 300 million. Average free cash flow, maybe $1 billion? In which case, it is 5 times free cash flow. EV to free cash flow. I think maybe real free cash flow might be a little lower. Oh yeah, I mean, adjusting costs and stuff like that is also pretty hard. If there's ever something that's a little nuanced, AI won't get it. And then, very important is products, getting the product data out of these things. And again, maybe that's something you chunk even further. So what ends up happening is you're chunking these systems into hundreds of steps, and you're just making them really fragile, because then you have to stitch them together with either AI or conventional programming or both, and you have to run checks on them again. And then the merge step is also not great. So it's just a mess, man. Trust me. But again, if you could do it, you got a free job, working for me all day. I'll pay you a nice salary. You can do that. You passed all my programming tests without the models getting better. Now, the models probably get better. It's not so much about context window, because the context window the context windows are large for all of them. Chunking is so that it doesn't lose attention. The attention, any big multi-step reasoning is not done very well when it comes to Yeah, not literal attention, computational attention, but yeah, literal attention too. I've been trying to do this for years, since the day OpenAI started fielding API, literally the day. All these stocks have pretty high correlation. HIMSS, Palantir, the quantum companies. It's basically just like different. I mean, the market views them as the same. They're obviously very different, in my opinion. Okay, so looking out a little bit, like these guys can kind of border on profitability. Last 6 years on average, they cash flow 770. A lot of chemical companies trade around this multiple, so I don't know if it's that exciting. I mean, this is kind of company you'd like to own, and it makes it that makes it an attractive long as well. I don't know the industry that much, but I kind of like it. Yeah, J&J kind of has some long-term issues, right? They're victim of their own success, a little like Merck. Yeah, this is OLN, some random chemicals company. I don't know that industry, but I follow Linde. Look, and Linde, it's a different company, but it's a lot more inexpensive. So the pair trade could be long OLN. As you may know, JB, I mean, I followed these stocks my whole life. You know, the ensemble of J&J for a long time was just very strong, you know. And before biosimilars, these companies were unstoppable. You know, the question is, do you value PP&E here? And theoretically, you could sell your PP&E. Kind of goes hand in hand with it's attached to your cash flow though. So. Yeah, Linde has a lot bigger margins, I guess. I don't know what's going on with quantum. I think it's basically HIMSS and Palantir. If you look at a R squared of these stocks, it's almost 1. They go in tandem. It's just a speculation button being pressed. Market's up 2%. So I like it. I mean, chemical stocks have always attracted me. I understand them to some extent. Oh yeah, I mean, I've been wrong so many times, man. In the past, when I was younger, it was arrogance, lack of experience, wanting to be out in front of your skis. You know, you got to be patient. You know, there's no race. It's hard to believe that. Well, one of the biggest problems is you don't know if you're ready or not. You don't trust the people who would arbitrate that. You know, you sometimes would feel that like, oh, they don't want you to be ready in some way. But a lot of these people they don't have your best interests in heart, but they're honest with you. And knowing whether or not you're quote unquote ready is very important to decide, you know, are you willing to take the next step in your career? The other thing I'd say though is that the marketplace is very efficient for talent. So if nobody's willing to pay for your talent, yes, you know, you could make it work by being, David Einhorn. These guys also felt that the market wasn't pricing their talent correctly. They went on to great success. And so it is possible, but usually the market's, you know, pretty good at pricing your talent. And if it's not pricing your talent correctly, you know, the temptation is to get mad. But the reality is maybe you need more seasoning, you know, a little bit more work. It's not the end of the world. You know, people like me, I used to take that really personally. Say, you know, I'm the best. What are you talking about? And the reality is, okay, maybe you're a smart person, but you haven't mastered this craft yet, or a part of this craft yet, or whatever it is. And a lot of people like that don't want to hear, constructive criticism. A lot of people like that don't want to hear, you know, that they're maybe not the best. You know, it's a blind spot. It's arrogance that will hurt you quite a bit. So you just got to be really honest with yourself. You know, a lot of this stuff is stuff you should probably learn younger. I think a lot of people who are quote unquote prodigies, you know, they have an issue with this, and everyone deals with it a different way. But I've seen it a million times. So I went to school with prodigies, I work with prodigies. I mean, that's my forte, and it's just it's very tricky. If you look at Norbert Wiener, I don't know. I feel like, you know, 90% of this stuff is psychology. It's very easy to, you know, get in your own head. All right, so Square barely grew year over year on transaction-based revenue. On subscription and services, whatever that is, they grew a tiny bit. And then there's Bitcoin revenue, which is kind of, my advice is not even to look at it. The transaction revenue is kind of the important part. They just make a small margin in Bitcoin, so. Yeah, starting young helps a lot, but I think that, you know, you start young in some skill, that's great, but, you know, a lot of this stuff is not about necessarily a skill. It's about an approach. It's about a philosophy. It's about a mental state. And those are things you don't always learn. when you're busy learning chemistry at a young age or programming or something like that, a lot of people don't want to, you don't want to hear this kind of stuff. In fact, I was with a well-known young entrepreneur recently, and I said, I was basically trying to caution him that with his current attitude, he's probably going to fail. And he really didn't want to hear it. I was just kind of like, look, man, I'm looking for, I think you guys got to get like very mature very quickly. It's a bunch of young guys, and geez, unless you could find some maturity, it's important. It's really important to become mature. Okay, so they grew 8%. That's not that bad. Yeah, so the Bitcoin margin kind of distorts their income statement, which is fine. It's not hard to exclude it out. Just off the bat, this doesn't look like such a bad quarter. I mean, maybe it's their guidance, I think, that was really bad. Cash flow is fairly abysmal. Oh, chess teaching will really teach you emotions. People get wrapped up in emotions in chess. And in fact, it really shows you if somebody's can't achieve a high chess score rating, they have this emotional attachment difficulty. It's a pretty good surrogate. You really have to be at peace with your inner mind, grow as a chess player. Super hard. And for others, super easy. For children, they have no idea about ego. No ego. They don't know how to play, and they don't care. They just want to win. So if you tell them, hey, the way you've been thinking about pawn structure for the last 5 years is terrible. It sucks. You got to forget everything. They're going to say, oh, wait a second. I know that, pawns need a supporting base and this and that. And it's like, stop thinking about your old way of thinking about pawns, or whatever it is, tactics. The kid doesn't care. Kid says, I don't think it's like kids' minds are more plastic. A lot of people say that. I think it's more about their ego. They're not embarrassed to lose. Some kids do learn ego fast. Not every kid's good at chess. I'm not sure I buy that plasticity thing. We learn over time to become embarrassed and have shame and have expectations of ourselves and things like that. It could be a mix of plasticity or whatever you want to call that and other things. So, okay, that's all 2025K. Got it. I mean, they basically lowered guidance probably, right? Yeah, this could be a buy. Let me see. Okay, guidance. Okay, so they had guidance of 10.22 with 2.1 of operating income. And they lowered that. We expect at least 15% gross profit growth year over year. Market does not like when you downwardly revise. That is like the one thing you cannot do. Okay, they also gave quarterly guidance. So they went from 10.22 to 10. Pretty modest reduction, to be honest, but $250 million, $200 million in operating income guidance reduction. Yeah, it's a buy. It's not like a PayPal buy, I don't think. They're still growing, but their day will come. But they also will have saturated, and it's not far away. Jack's making this Twitter 2.0. Growth's slowing for these guys, but at the end of the day, still growing. I'd buy it right now, but I already have PayPal, and I don't know that I want this much exposure to this industry. No, it's a good industry. It's a great industry. This is not, intended for you guys to rush out and buy it, by the way. Well, it's a very small position. I'm literally buying almost nothing. Just want a little bit more long exposure. For this portfolio, it's 30 basis points. There are some help features and some manuals on the platform. Other users also will help you. Some of it, once you get the hang of it, is pretty self-explanatory. I'll record a video soon that explains how to use it. It works the same way as Bloomberg, so if you plan on ever being a Bloomberg professional or somebody in finance that uses a Bloomberg, then Godel will help you prepare for that, and vice versa. If you've already used a Bloomberg, you can use a Godel. So they're kind of backward compatible. It purposefully has a little bit of a learning curve because you just go through that learning curve. It only takes a day or two. But once you go through that learning curve, you'll be so much more productive. And it's really designed for people that have to look at stocks all day long. If you're only looking at stocks 10 minutes a day, stick to Yahoo Finance. Yeah, if I would do a 25,000 listen, if you are dedicated, you want to be on Wall Street, it doesn't matter how much you start with, but you better not be trading just to make a quick buck, because that's not going to work. You got to be trading because you want a career, a real career. Then it doesn't matter how much you trade with, because you'll be adding
to your account with your income, with your eventual real job, ideally. I don't know. I don't think if I could only invest in one stock, I wouldn't be investing. But, you know, I mean, the nice thing about if you only could invest in one stock, you'd want to get implicit diversification, right? And the way you get implicit diversification is you invest in some kind of holding company or something. So you do like Berkshire or Leucadia or Lowe's. It's not the hardware store Lowe's, the other Lowe's. I mean, you're basically just asking what stock would you, because nobody's going to answer you NVIDIA or something like that. It's a little too reckless. I mean, it's a great company, but forever, you can never make another investment. You'd have to pick a company that's diversified. That is basically like buying the S&P 500, unless you had a really strong opinion about some management team. But the problem with management teams, in case you didn't realize this, is they die. They move on. They get scandals. They go to other careers. Either one is pretty good. Masters in finance will teach you a lot of math. A master's in math will teach you a lot of useless math. No math is truly useless, but no, I mean, I'm short quantum as usual. I mean, I don't know why Rigetti's up 15%. I think it's a risk-on appetite in the, you know, kind of environment in the market. You see a lot of these stocks are up a lot, including things like, you know, good companies like HIMSS and Palantir. I've traded hundreds of millions of dollars of quantum stocks. Magma, semi-groupoid, category, groupoid, commutative groupoid, magma, again, well, instead of a partial magma, commutative magma, quasi-group, commutative quasi-group, unital magma, commutative unital magma, loop, commutative loop, semi-group, commutative semi-group, associative quasi-group, commutative and associative quasi-group, the monoid, commutative monoid, group, and abelian group. There's 5 binaries, so this should be 2 to the 5th, 32, right? Some of these are obviated. Fartcoin basically tells you what's happening next.
Order cancelled.
You have a startup, I have a fart up. 100% Ramiro. That's why I have it. 1 fart per ounce of gold. It's the only way we fix this deficit. Get off the fart standard. RSI is relative stink indicator. Should you try out Godel Terminal or subscribe to it? Do me a big favor. Keep these streams coming. And maybe even start investing some more, getting some co-hosts and stuff like that.